It may have been all over before it really began, but the aborted takeover bid for David Jones could have long-lasting implications. The ASX has issued the upmarket retailer a please explain, and the corporate regulator ASIC is monitoring recent share trading in the company. But David Jones is holding its ground, saying it did all it could to verify the takeover before reporting it to the market, as Neil Woolridge reports.
Was it a stuff-up or a conspiracy? The short-lived takeover bid for David Jones by the mysterious UK fund EB Private Equity had elements of a cloak and dagger thriller and high farce. But the episode continues to raise serious questions, in particular over the local market's continuous disclosure rules.
When these situations do occur, there is that potential for manipulation to occur in the market. Not suggesting that it occurred, but there is that potential because we've got the market operating on the basis of grossly incomplete information.
The volatility that we saw in the stock market is not very good for our market. It's not good for the reputation of the Australian Stock Exchange or our regulators. And I think the regulators need to have a proper look at exactly what's happened here and who knew what when.
The Australian Securities and Investments Commission says it's monitoring the episode and is looking at potential issues regarding disclosure and trading in David Jones by domestic and international parties. In response to a please explain letter from the stock exchange, David Jones says it made its first announcement to the market last Friday because the takeover approach was likely to have been known by several third parties outside the company.
The continuous disclosure rule is there to ensure that high-quality information is disclosed to the marketplace. And what we do know is that whatever happened on Friday, the information that DJs, in a sense, reluctantly disclosed was not of high quality.
The biggest criticism you could make is why, if they didn't have all the information, which it took the financial press 24 hours to work out, why not ask for a trading halt?
Corporate governance advisor Martin Lawrence says the incident highlights the difficult position of Australian company directors if they're trying to negotiate a takeover through the scheme of arrangement process.
And that's what puts the directors in this awful position of trying to evaluate whether or not an offer is serious, whether or not they should tell the market about it, whether they actually have an offer, whether they have credible bidders, although usually finding out whether you have a credible bidder or not is not a problem.
Yet still speculation continues about whether David Jones' suitor was the real deal. Fairfax is reporting that EB Private Equity's chairman was once sued by a Sydney-based model for an unpaid £700 bill from a photo shoot. However, Professor Ian Ramsey says a bigger concern for ASIC should be the credibility of the bid itself and the market-sensitive information that was leaked initially through an anonymous UK blogger.
A heavy price is being paid for leakage of information, and we do need to the extent possible, try and work out exactly what has happened here.
But it may be many months or even years before ASIC gets to the bottom of the share trading in David Jones over recent weeks, and perhaps more importantly, who leaked news of the takeover to the wider market.